This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. So we have the stock market sell-off going on, and I want to return to one of our favorite podcasts because I know this is what you're all wondering about right now. And it's, what are the cheapest 3 stocks of the Mag 7? We've talked about the cheapness in the Mag 7 several times over the years. And now with the sell-off and the sell-off happening in the Mag 7, I thought we should take a look to see, has the list changed of who are the cheapest of these big cap stocks? And I think you might be surprised, because a lot has happened since this sell-off. Okay, so let's just dive right in. There are 7 Mag 7 stocks. And interestingly, when I was preparing for this, I wrote down 6 of them, and then I couldn't remember the 7th. And it is the one that doesn't really get that much publicity recently. So let's go through the list again. It's Amazon, it's Apple, Meta Platforms, Alphabet, NVIDIA, Tesla, and then the one I couldn't remember, Microsoft. So, and I even own Microsoft. So that was a brain freeze on my part, but Microsoft just not that heavily in the news recently, like some of these others are. So I already went through, I took a look at the fundamentals on each of these. And, that includes the price to earnings, the PE ratios, price to book ratios. I looked at price to sales, which is probably among the most important of these ratios for these stocks as far as finding value and cheapness. And then I looked at the PEG ratio, which combines the value with the growth. I would say the least interesting to me out of these 4 is the price to book, and then followed by the PE, because a lot of people don't like to use PE for these kind of mega growth type of stocks. They feel it doesn't really reflect what's going on at the company. And we all know the PE is just going to be, a bit higher on these types of growth type of names. But we're still going to look at it because it is a metric everybody does use. And it's kind of interesting right now what is going on with it. And I'm going to look at the cheapness with all of these stocks in each of these categories, which each of these fundamentals. And then I'm going to talk about overall, which are the cheapest, because that's the whole point of the podcast, right? Okay. I think in the past, when I've done this, we had Alphabet, we had Amazon, we had Meta, I believe, as the cheapest stocks of the Mag 7. So what's happening now? We've seen a big sell-off in some of these. Tesla was down at one point about 50%. So has it moved into any cheap categories on any of these fundamentals? Let's see. I think we might be surprised. Okay, let's start with Amazon. I do own it in my own personal portfolio, and I have owned it since 2016. So I'm a long-term investor in it. Warren Buffett also still owns it in Berkshire Hathaway's portfolio. It often gets lost amongst everything else he owns. And so people forget that he owns it. And it was one of the lieutenants who bought it before the pandemic, I believe it was. Yes, it's going way back now that we're 5 years since the start of the pandemic. And at the time he said, that he was told that there was value there. That's about all he said. And it's never really been discussed since then. So Amazon, year to date, it's down 9.3%. And these numbers are as of March 12th. March 12th, 2025, year to date down 9.3, but over the last month, it's down 13%. So it's been in a correction over the last month. PE now is at 31, and it's been kind of hanging out in this 30 area now. And that's cheap historically for Amazon. It's always traded with a higher valuation on the PE basis of, 20 or never in the 20s, but it's traded at 80, 70 times. Then we saw it go down to 60. Then it was in the 40s. I thought that was pretty cheap on a PE basis. Now we're at 31 times. This is cheaper than Walmart right now, which was trading at around 34, 35 times. So I've never seen it trade under Walmart, because remember, it's not just retail side. It has AWS. So it is has a big tech component. But PE's at 31.1, price to book at 7.3, price to sales, that's the key metric, as I mentioned, is at 3.2. It has always been lower for the Mag 7 stocks, so it's still at 3.2. And then it has a PEG ratio of 1.4, which is pretty low. It's not at the value level yet, which is 1 or less, but I don't really expect the Mag 7s to be value and growth, right? I just don't. But 1.4 is very low, so that's still attractive. So those are the fundamentals for Amazon. Then let's take a look at Apple. AAPL is that ticker. It's been struggling recently. A lot of people, congratulating Warren Buffett of maybe getting out with a big chunk of his shares that he sold last year at a good valuation and level. He sold with a high valuation. And now the shares year to date are down 13.3%. But over the last month, just down 8.4%. But still double digits year to date. PE still elevated at 30.4. Price to book is at 49.7. Wow, that's really high. Price to sales, 8.4. This was always the problem with Apple recently, is that price to sales level has spiked. And PEG ratio, which is value and growth, at 2.2. So rather elevated over Amazon on the PEG. Then we had Meta Platforms, ticker META. Year to date, it's actually up 5.8. But remember, it had that streak of 20 gains in a row so far here in 2025. But it has given back all of those gains, because over the last month, it's still down 14.6%. So quite the roller coaster on Meta Platforms. PE is at 22.7. That's pretty low. Price to book, 8.4. Price to sales, 9.3. So that's a little elevated now for Meta. PEG, though, is at 1.2. That's really low. We're getting closer to that 1 level on Meta. So Meta still looking pretty cheap here, since it has given back the recent gains over the last month. Then Alphabet, GOOGL, year to date, down 11.7%. Over the last month, down 9%. For some reason, it's felt worse than that. Not sure why. I do own Alphabet in my own personal portfolio, but it just is felt worse than this double digits year to date. PE is pretty cheap now, 18.4. So we're getting under 20 again with some of these stocks. That's a little surprising, but here we are again, 18.4. Price to book, 6.1. That's pretty low. That's the lowest we've seen so far. Price to sales, 5.7. So that's not as low as Amazon, but it's not as elevated as some of the others. And remember, when you get up towards 10 times is when people begin to think it's a little stretched on the price to sales, even for a tech company. So this is at 5.7, PEG ratio of 1.18. So just under Meta Platforms. But that's very low as well. So we got some value and growth also with Alphabet. Okay, let's look at NVIDIA. This one I felt should be interesting, right? Ticker NVDA, because year to date, it's down 13.8%. And 1 month, it's down 11.7%. we've seen some of these double-digit declines with NVIDIA over the last 2 years, even amidst this rally. But this one seems to be sticking a little bit more than some of the others we've seen. But PE down. It is down. Last year at one point, it's trading around 40 times for NVIDIA, even as the earnings were rising because the stock was rising. But now it's pulled back. PE of 24.8. That is historically low for NVIDIA, even before the AI revolution, to trade at 24.8 times. That's cheap. But price to book is still elevated, 33.4. And price to sales also still elevated at 20.3. But that has come down as well. It was, in the 30s and the 40s when we've discussed the Mag 7 in the past. So this pullback has cheapened it, but also because it is only down 13.8% year to date. So this isn't, a super dramatic pullback, but the rest of its fundamentals have continued to go higher. Its earnings and sales growth still in the double digits expected for this fiscal year and next fiscal year. And given the last earnings report so far, that is still holding at these elevated levels. So NVIDIA is quite a disconnect with the street, really, the stock, with what people are thinking and the actual company fundamentals. So the fundamentals, as I mentioned, are still holding up, the earnings and the sales, and the street thinks they shouldn't be. So that's where we do get the disconnect, which does give it a little bit more of that value feel. It's not that the street is ignoring NVIDIA, because how could it? At least right now, it's not really ignoring it, but it refuses to believe that those earnings and sales are going to hold up. That's what it comes down to. So who's going to win out? Is it going to be that these fundamentals do hold up and it will be a cheap stock, or are the fundamentals going to break down? So the PEG ratio on NVIDIA, which is the value and the growth side, reflects this kind of conflict right now because it's sitting at 0.97. Yes, it's below 1. And 1 is the indicator for both, value and growth. So it's got it now. And I didn't think we'd see a Mag 7 with a PEG under 1. But here we are. So that's NVIDIA looking pretty interesting here, NVDA. And then how about Tesla? That is the stock that I mentioned had been down 50%, but has rallied a bit off of those lows. Year to date, now down 38.6%. 1 month, it's still down 26.3%. So still a pretty big pullback here. PE has fallen pretty dramatically. It was around 180, and now it's down to 77. So Tesla has always had an elevated PE, a lot like some of these other stocks. That's why people don't like to use the PE for these big growth names. So that's still high, but it is down from where it has been. Price to book is at 10.1. So that's a bit elevated. Price to sales, the key metric, is at 7.6. That's not as bad as some of these others, and it's not at 10 or higher as some of these others have been, like NVIDIA. And then the PEG ratio is at 3.3. So that is elevated amongst all of these stocks we've talked about so far, and it's the highest. So not a lot of value, plus the growth component there with Tesla. That's ticker TSLA, in case you don't remember. And then we finish up with the one that I had the brain freeze on, Microsoft, ticker MSFT, which I do own in my own portfolio. Year to date, it's down 9.1. And over the last month, it's down 6.3. So not as bad over the last month as some of these others. And maybe that's because it isn't really in focus for most investors. PE has come down from a little bit from where it was in the 30s. The last time we talked about it, it's at 29.1. Price to book remains elevated at 9.3. Price to sales was always the problem when we talked about Microsoft in the past, because it had reached that 10 level, which in the .com era became a problem. And once it got that expensive, it did have that pullback that lasted 3 years. So price to sales now is at 10.8 still. And the PEG ratio is at 2.02. So that is among the elevated PEG ratios other than Apple and Tesla. So where do we stand on each category here? Now that I've given them all to you as of March 12th, it is interesting to look at them on the individual basis here. So let's start with the PE, even though I know a lot of people don't use it, but we do as value investors. So we're going to take a look. PE basis, Alphabet is the cheapest at 18.4. And then we had Meta at 22.7. And then interestingly, this is where things have been shaken up a bit. We have NVIDIA at 24.8 times. I didn't think I'd see NVIDIA on this list as cheap on a PE basis, but here we are. Price to book basis, Alphabet wins again at 6.1. Then we have Amazon at 7.3, and then Microsoft at 9.3. So, no, then we have Meta. How did I miss Meta? Meta is on there on a price to book. Sorry, Microsoft. I missed Meta on that one. So, Meta at 8.4, and then we would have number 4 is Microsoft at 9.3. Okay, then we looked at the price to sales, and it is going to be Amazon, which won this category the last time we talked about these stocks, and that's at 3.2. Then we had Alphabet, which was also cheap on a price to sales the last time at 5.7. Then we had Meta at, no, why am I including Meta? Maybe I just got it confused here a couple of times. Then we had Apple at 8. No. Then we had Tesla. I was really out of it when I was thinking. Then we did have Tesla there at number 3 at 7.6. Sorry. Not Meta. That is on PEG. Meta comes in third on PEG. So price to sales, it is Tesla as the third cheapest there at 7.6. So switching over to the PEG, we have NVIDIA because it's under 1. So it is the cheapest one there, winning in that category. Then we have Alphabet at the 1.18. But that just barely beats out Meta at 1.2. So finally, we do have Meta there, as I mentioned, in that final category. So what are the trends here? We have Alphabet mentioned 4 times. It's mentioned all 4 categories. So it is the clearest winner overall on cheapness. It's got the PE, it's number 2 in the price to sales, and it has that low PEG almost hitting or getting closer to that 1 level. So that's all just very impressive here. And you like to see it, right? I do own Alphabet in my own personal portfolio, and I have owned it since, I can't remember exactly when I bought it, 2017 or 2018, somewhere in there. But Alphabet, big winner. It's got the advertising side, especially on YouTube. I still like to track it for YouTube. Earnings this year expected to be up 10.7% still, even though a lot of estimates have come down since its last earnings report. So analysts kind of trying to figure out what's going on with Alphabet here, but still remain pretty elevated. And then 2026 rebounding a little bit more for 2026, up 14.8%. And still double digit on the sales side, even this, given the size of the company, 11.8% for this year and 11.2% for next year. So Alphabet, the cheapest of them all. And then we have kind of a tie for NVIDIA and Meta in the second category. And so I went with Meta here because it's got that low peg, even though NVIDIA is even lower. But we can't deny what's happening on the price to sales side on NVIDIA, and it still remains just extremely elevated at 20.3, Meta at 9.3, and then a slightly lower PE at 22.7 versus 24.8. But this was a close call. And so I'm keeping NVIDIA kind of in there as the tie, but I'm awarding it to Meta as one of the three cheapest, just for overall cheapness. But I'm surprised to see NVIDIA sneaking in there. And so for the third stock, even though it's really the fourth one, I will include Amazon. It was in among the cheapest the last time we did this because it's got that low price to sales at 3.2 and the peg is attractive at 1.4. So we do like to see that price to sales low, and it's still not at the value category. None of these are values on price to sales. I wouldn't really expect them to be, however, because we are buying the growth component with these stocks. But you may know it's in a bear market, so to speak, if these price to sales ratios continue to fall and we do get something in the ones. Stay tuned. I'll be bringing it to you if we do, but Amazon is the one who possibly could get there if the shares continue to drop. Remember, year to date, they're down 9.3 right now. So if we do get maybe a bear market pullback over 20% down, maybe we see that come down, but I still don't think it's going to get into that one or less category. But, maybe Buffett won't have to explain anything coming up because Berkshire Hathaway still owns the stock. And so then it might be in the value category by that point. But we'll see. It's still on my top three of the cheapest of the Mag 7s. But it does make you kind of wonder whether or not Berkshire was sitting on all that cash, might be sitting there thinking maybe we want some Alphabet. Over the last year, I've been doing whole entire episodes of this podcast saying that Berkshire Hathaway and Warren Buffett should be buying Alphabet. And that was when it made its last lows last spring, when it also looked equally this attractive on some of these actual value fundamentals, not just on the PE basis, but that peg also coming down. But Berkshire likes to get it, cheapest of the cheap when everybody's really hating on the stock. So I don't think we're there yet with Alphabet. It's kind of just like, Alphabet, we're not hating on it. We're not jumping in to buy all the time, but we'll see if it gets cheaper, we might be even more interested. So those are our winners. Alphabet, GOOGL. We're going to include NVIDIA, but we're giving the second place to Meta, but then followed by NVIDIA, NVDA. And then at number 3, because the other two are kind of tied, we're putting in Amazon at AMZN. As always, I aim to bring you as many value stocks as I can. Some of these are looking value-ish if we are measuring by PEG at least, and PE's even looking interesting. So you never know what's going to be in a value type of category, even among the Mag 7s. So I like doing this episode, and we will revisit if this weakness continues because some of these do appear to be on sale. And that's what we like to get. So you want to join us here on the podcast, you can subscribe on Amazon, of course. I know many of you are there. We are on YouTube as an audio podcast on our podcast channel at Zacks Podcast. Just put that into the search bar and you will find us there. And we're on Spotify, Amazon Music, and just about anywhere you can get the podcast. But be sure to get us somewhere because I'll be back next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.